This right here is one of my dividend stock portfolios, currently valued at just around $490,000. The current largest position as far as market value goes in this dividend stock portfolio of mine is the 1,000 shares of Apple that I purchased many years ago. I purchased the 1,000 shares of Apple at an average cost of around $118.36 per share of Apple, and now they're each worth around $174.60. The current gain I have in the position is around $56,000. In this video, I'm going to explain to you why I plan on selling these 1,000 shares of Apple sometime during this year, and why I'm most likely going to deploy every single dollar of the proceeds from this sale into the SCHD ETF. We're going to go through all this and more right after you please drop a like in this video and subscribe for more content like this in the future. So first, a little bit of background. I'm currently a 30-year-old dividend investor that's been buying dividend-paying stocks for around 6 or 7 years now. Now, like a lot of you probably guessed, I didn't purchase all 1,000 shares of Apple on one certain day. I acquired the Apple shares over various years, and what was pretty lucky for me, I was able to buy a bulk amount of these Apple shares during the 2020 crash and around that area, so I was able to acquire a lot of the shares for pretty cheap, hence why my average cost for the Apple shares is only $118. Now, I originally purchased these 1,000 shares of Apple in the hopes of holding on to a long-term stock that does offer a small dividend of right around 1% or so not the biggest dividend in the world, but I wanted to buy a very solid company that will allow me to sleep well at night because I am sort of a worried conservative investor, if you guys haven't found that out by now. And I wanted to find a stock that was going to also appreciate in price. Now, over the lifespan of me holding onto my Apple shares, it did increase in price quite a bit. I mean, I'm up around $56,000 on the trade. But the aspect that I don't love about Apple is the fact that even though the starting dividend yield is very low and the company makes a lot of money, the dividend growth rate for Apple on a 3-year time frame is 6.35%. The dividend growth rate on a 5-year time frame, 8.8%. And the dividend growth over the 10-year is a little bit better at 9.54%. Now, I guess maybe I'm just being a little bit greedy, but I do wish that Apple would increase their dividend a little bit quicker. And although it is great to have a $220 or a $230 dividend paid by Apple on a quarterly basis, I wish that it would have been bumped up a little bit quicker. So now that I've explained a little bit about the backstory on the shares that I purchased of Apple a while back, and why I purchased them, and in my opinion, some of the shortfalls that Apple's giving me at this time, let's talk a little bit about SCHD and why I'm planning on selling my Apple shares and going all in on the Schwab US Dividend Equity ETF. So I'm sure by now you guys are pretty familiar with SCHD. It was an ETF that was launched by Charles Schwab in 2011. The ETF invests in stocks of companies operating across energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, communication services, and some utility sectors. Which brings me into reason number 1, that I'm planning on going all in on the SCHD ETF with all the proceeds that I receive from my Apple stock. SCHD ETF is much more well diversified than, of course, holding on to $170,000 worth of a single technology stock like Apple. And as I get further and further along into my investing career, I'm realizing that I don't necessarily have the time or energy to constantly watch single pick stocks. And moving forward as I get older, I'm consistently finding myself investing into high quality dividend ETFs or other ETFs that offer growth potential with a diversified basket of stocks. Looking at SCHD's top 10 holdings, just these top 10 companies alone would make me sleep very well at night, knowing that my money is diversified, with these top 10 being the largest of the pots. Another reason why I'm considering doing the Apple to SCHD shift is because SCHD does also offer a lot of growth potential as far as the ETF price. I mean, if we were to zoom out on the chart, SCHD is up 171%, and this is since 2011. Now, I'm sure at this point some of you already guessed what the main reason is on why I'm planning on switching from Apple to SCHD. It is because the starting dividend yield is much higher. SCHD is offering a starting dividend yield as of the price right now of around 3.7 to 3.8%. Now, this is much different than Apple's starting forward dividend yield of 0.55%. And of course, my yield on cost is a bit higher. It's around maybe 1 or 1.2%. But with the 3.74% starting dividend yield or something around there for SCHD, and remember investing $170,000 ish worth of capital from the Apple sale, I will be able to generate a lot more in dividend income, even the first year invested into SCHD. Now, if you're a dividend investor, you are also probably obsessed with the idea of the power of compounding. The power of investing into something, having it pay you dividends, reinvest into more shares of whatever stock or ETF it is, and then on top of that, having the dividends grow over time, which is exactly what I'm expecting SCHD to do for the next 10 years plus. SCHD currently pays out around $2.80. At least that's the rough estimation for the year 2023. Now, of course, no one can tell the future. No one knows exactly how much SCHD's dividends are going to be, but just generally speaking, if SCHD was able to raise their dividend at an annual rate of 10.03%, which means the dividends double every 7.2 years, SCHD would be paying out around $3.75 by 2026, which is just a few years away. Now, doing the math on the amount of money that I'm planning on investing in it, the power of compounding is going to be in full effect pretty much just after a few years. Now, there's definitely going to be some critics of this idea of selling all my shares of Apple and going all into the SCHD ETF, and I want to hear all of your criticism and ideas down below. I honestly enjoy hearing what you guys have to say. And just note that I understand that Apple most likely will appreciate as far as share price in the future, or has a chance to, a lot quicker than something like SCHD. But at this point in my investing journey, I do want to start to focus on more income generating assets. And this is because of a few reasons. As I get older, I want to de-risk my portfolio. Like I said, diversification is very important to me. Also, being invested into higher income generating ETFs, for me personally, is something that I'm interested in being invested into. And this is because in the future, if I choose to start traveling the world, or whatever I might choose to do, having more residual income from dividends coming in is most likely going to help. But also keep in mind that my strategy is my strategy. And that's what's so cool about investing, and especially dividend growth investing. We all have different strategies. We all have different needs and wants. One investor might really favor a little bit higher income now for a little bit less capital appreciation later, where another investor might not care about generating a single penny of income right now, if it means that the future capital appreciation could be much, much higher. The moral of the story is we all have our own strategies, and we all have our own ideas of what the perfect portfolio will look like. But I want to hear what you guys think down below. Do you think it's an absolutely crazy idea to sell off 1,000 shares of Apple stock in order to invest all the money into an ETF like SCHD? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.